Everything in this video is not intended as financial or investment advice and is for educational purposes only. I'm Josh Olszewicz, the head of research at Valkyrie. Let's take a look at the midweek market update. I'm going to start with Old Faithful here, Trueflation, which correctly and accurately did signal a decline in CPI year over year last week. And as I mentioned last week, risk assets did have a bit of a party over the weekend. And now comes the tough part. The tough medicine, where it looks like Trueflation is signaling a leveling off of inflation here, which is problematic for several reasons. But Trueflation, by the way, measures millions of items every day across the US economy, uploads that to the Chainlink Oracle network, and spits out a number for us. So this is direct year over year change, which I believe the CPI is actually changing to. Previously, it was current year compared to the previous 2 years. Now I believe CPI is going forward is going to be a direct year over year comparison. So CPI may be more and more aligned with Trueflation going forward. But the problem here is inflation has not continued to decline at a similar pace that it did from 10 to 5.5, let's say. And we can look at which items are being sticky. Let's say we've got food still up there, housing down significantly, but still above 5%. Transport basically back to normal. Utilities are among the highest at around 12% here. And if the SPR continues to get drained or not, that may affect this number greatly. If the war in Ukraine continues for months and months and months, if natural gas prices continue to remain elevated, if winter somehow gets worse in the next month, right? There's all sorts of branches on the decision tree here, but a 12% year over year for energy still is problematic. Health up only slightly, durable goods up 7.5%, something like that. But I think we get the picture here. The big problem child is energy for sure at the moment. And if we look at Fed fund futures rates probabilities, we have a meeting coming up end of the month, beginning of February, and they've pretty much priced in a guaranteed 100%, near 100%, 25 basis point hike, and then likely 25 after that in the meeting in the following month. And Fed fund futures has currently priced in essentially holding at those rates at 5%-ish, basically for the rest of the year until November. Now that's the current outlook. Now again, the problem is if inflation does not continue declining at a similar pace and rates are not above inflation, there will be pressure from the Fed hawks to continue raising. Alternatively, on the other side of the coin, obviously, is unemployment, consumer spending, the general health of the economy is definitely going to be taken into account there. Whether or not we're going to be hiking into a recession, if we even have a recession, all those questions will be answered over the course of the year. But that may drastically change what this Fed fund futures curve looks like. Currently, it's also pricing in a decline towards the end of the year. So we'll see. We're all watching the same movie at the same time. But as Nick T from Wall Street Journal reports, Bullard wants to take rates well above 5%. He wants a 50 basis point hike. We'll see if that's what he gets. I doubt it. But there are people on the Fed who still want to be aggressive. This may be more of a signaling, posturing than actuality, what they're able to achieve. Fed President of Cleveland, Loretta Meester, also calling for 5%. So again, in line with Fed fund futures, but we're not there yet. And on 25 versus 50 in the next meeting, still an open question, the way she's phrasing it. And then the Wall Street Journal also asked a bunch of economists where they think the Fed will reverse course, where a pivot will actually occur. And that is also basically in line with Fed fund futures curve. We've also had some interesting yield spread blowouts here with the 10-year and the 3-month. Now, I know about as much of this stuff as people tell me, but that doesn't seem rather bullish for the health of the economy and maybe signaling increasing likelihood of recessionary conditions throughout the year, and whether or not the Fed takes this into account or takes it to heart when making their policy decisions They say they do, but we will see if they mention it during the next meeting. On the FX side of things, on DXY, which is a basket of currencies relative to the USD, 60%-ish, 62% is Euro, some JPY in there, some CAD, and we are seeing continued weakness in DXY, which generally is good for risk assets. Gold also up significantly, especially from last year. And here's the Euro chart, which is basically the inverse of the DXY, showing tons of strength here. Now, one thing about this Truflation data, if we're to believe this, which I believe the US data, I'm not so convinced on the UK data, but currently they have the UK data basically double what the UK government is seeing in their figures, which may be a calculation differential. I'm not really sure, but this tells me that the UK has a long ways to go as far as rates are concerned before they get inflation under control across the pond. So that may be why the Euro is showing some strength here. Euro, not the UK, obviously, but if on a relative basis, Europe and the UK need to raise more relative to us, I think the thinking is that DXY should continue to weaken. That's my read on it anyway. Moving to digital assets, immediately whenever there's a price rise, the first question is, was there news? What happened? So I look at everything, right? Look on chain. What's going on chain? Are there a ton of transactions happening? Are there large transactions happening? This is Bitcoin's active addresses and transaction counts. Relatively flat, relatively quiet year over year. This is 2022. Slight uptick, nothing too crazy. This is a monthly average. If we go down to, let's go the weekly, so it's not as noisy, there is a noticeable rise, let's say, in transaction counts and active addresses. So there was a flurry of activity, not necessarily leading price, but along with the price rise. There was also short liquidations, which fueled the price rise. And looking on ETH side of things, ETH actually is seeing a decline by the looks of it in on-chain activity, in active addresses, transaction counts, monthly basis, weekly basis, still relatively elevated, holding that year over year level, but in general, trending downwards. So it's not like we've had weeks of rising on-chain activity to sort of justify price action, but we are seeing baseline on-chain activity for both Bitcoin and Ethereum hold relatively steady. Something else we've been watching throughout last year was coins on exchanges. So Bitcoin in the green, ETH in the pink here. And throughout the entirety of 2020, 2021, most of 2022, we saw large declines in coins sitting on exchanges. These represent sellable coins realistically. Most people don't send coins to exchanges, especially centralized exchanges, unless they are selling them. And we continue to see a relative decline in coins sitting on exchanges, which could be a signal for a holding mentality or an investing mentality where you're holding over multiple months or years even. There's no rush for most people, by the looks of it, to want to sell their coins at these levels in respect to Bitcoin and Ethereum. And if we compare the issuance between Bitcoin and Ethereum, this is issuance in BTC terms in the orange here throughout the years between various block reward halvings. So currently it comes out to around 1.72% annualized issuance. And that's about 900 to 1,000 BTC a day. That's minted, birthed, brought into the world by miners who then choose to sell it, hold it, move it around. They do whatever they want with it, and it gets introduced into the ecosystem. So issuance for Bitcoin has declined significantly since 2010, and it will continue to do so. Unlike paying attention to the Fed Fund futures curve or the Fed's rhetoric or FX rates, we can just look at the programmatic supply of Bitcoin. And now ETH is a little different. ETH has a burning supply, a transaction burning mechanism. So the higher the fees, the more the token burn, similar to like a buyback, but it goes into nowhere. The nothingness burn literally means it sort of disappears. It goes into an unreachable address. So over time, ETH could flip disinflationary. You can see Bitcoin versus Ethereum here as far as the issuance differential, and then you can see ETH before the proof of work to proof of stake transition compared to now, and issuance now is basically flat, basically zero, and that will continue to fluctuate. On top of that, 15 million ETH is sitting in an unreachable place as well in staking. And it's continuing to represent a greater percent of the supply. Those staked coins will eventually be unlocked when an unstaking mechanism is brought about into the protocol, but right now they just are sitting there. So between the burn and the stake, ETH's net issuance is quite low, if not disinflationary. Flipping here's the technicals for Bitcoin. The Adam and Eve that I discussed last week played out, which is a good sign. Not only that the TA was working, but the TA was working in the direction it was expected to go. It reached targets it was expected to reach. If you want to hear me talk about that last week and the rationale for that, you can visit the video. But we're at exactly the place where the TA suggested we would go, in that this measured move slightly above it. We have a bear div up here, higher highs in price, lower highs in volume, and RSI, momentum. So this is a natural place to allow buyers and sellers to come back to an equilibrium, allow sellers to sell into buyers, allow buyers to disappear. Whatever happens, happens up here. But what we want to see is definitely holding that 20K level. And this is volume profile at price. And most of the time, this does work as support and resist levels. So what we don't want to see, again, is a price below 19.5. You can see the bite, the gap out of VPVR between 20 and 16. So between this week and next, I'd love to see some sort of accumulation pattern appear at that 20K level. Zooming out a little bit, if we look at the trend channel, the pitchfork here since 2021, the cloud in the background there, the 200-day moving average in the red, and then the 200-week moving average in the green. Bitcoin is slowly inching its way up various levels. And much like VPVR, much like this 20K range, now what we want to see is turning resistance into support, confirming support here at the 200-week moving average at the cloud. These averages will slowly move up. I don't have the 50 on here, but we don't even have a 50-200 cross yet. The golden cross, as it's known. And we're still far below the 200-week moving average. So we get plenty of resistance levels on the upside, as well as some supports closer to price on the downside. But this is definitely going to take some time. I don't expect this to have another intra-week move, plus 10% like it did last week. What we may see is this inverted head and shoulders, shoulder, head. Shoulder, I didn't draw it out, but the horizontal is pretty apparent there. So maybe we see lows matching the September lows, and then retest that $21,000 level. But any sort of reversal pattern, just as it was at the bottom here, is a great sign for at least an attempt above these resistance levels. Now ETH looks a little different. This chart's a little busy, I know, but again, we have the cloud, the 200-day moving average, downward channel here. We've got the 2018 all-time high. We've got the 200-week moving average. So right now ETH is above all of those things for the first time since late 2021. So the trend, in my opinion, has quietly shifted from bearish to bullish. I say quietly because I don't see a lot of people talking about all of this collectively that we've emerged above. Now, again, the key here is to make 1500 a support level, confirm it, and on our merry way we go throughout the year to the upside. Much like BTC, I could see another sort of inverted head and shoulders type of fractal shoulder, head, shoulder yet to be formed around 1400, and then a retest of 1600 a week or two from now, let's say. Not necessary, but a potential path towards higher highs. ETH also has a broader accumulation fractal or repeating pattern that you see rather frequently in crypto and digital assets, like coffee and accumulation. This was 2015 Bitcoin. This is about as textbook as you're going to get. I didn't know that at the time. Certainly know it now after seeing this over and over again. Not perfect in ETH's case here, but quite similar to that accumulation profile. Basically, you have a defined support and resistance and sort of play within the range. And towards the end of the range, you eventually see signs of strength as you're making successive higher highs and eventually sort of making accumulation patterns around that previous resistance level. So I do like this for ETH. Maybe later in the year, not necessarily this month. We'll see what the Fed says, right? All that's going to affect all of this anyway. But into Q2, I do like a break for ETH above 2000. And ETH BTC, which has been a lot like watching paint dry or grass grow, still looks rather bullish to me. On trend metrics, on sort of pseudo chart patterns here, it's got this equilateral triangle. It's got a broader, potentially ascending triangle here. Now, ETH did not outperform BTC over the past week, but it's still sitting in a decent spot for higher highs. Now, what's going to happen is if this breaks out, there's again going to be that question, why did this happen? And I'm going to say, well, the fundamentals tell you what to buy. The technicals tell you when to buy most of the time. And the fundamentals on this pair are simply that supply differential. At least that's the narrative currently. That narrative, I think, will very much help the ETH BTC price move higher. But that may take some time here into Q2, potentially Q3. Then lastly, I'll just mention all of the layer ones on the right side here. AVAX, Atom, DOT, Matic, BNB, Tron, Solana, pretty much moving together. Solana overperformed to the downside, was down something like 98% on the year, 96%, and certainly overperformed after the beginning of the year, January 1st, and coming back to earth now. There are some overperformers here on a relative basis. You can see AVAX in the red had a nice move when an AWS partnership was announced. I'm always hesitant long-term for these partnership announcements for anything. Chainlink was famous for this. It's great to see the partnership. It's better to see the actual utility over time. I think a lot of non-crypto people see these partnerships with the physical world and get super bullish on that specific coin. But until those partnerships materialize into actual on-chain activity or use cases or what have you, it's hard to be super convinced that much will happen out of it over time. Not saying that it won't in AVAX's case here, but I've seen a few of these announcements in my time, and most have ended with a whimper, came out with a bang. So I would love to see this AWS partnership with AVAX actually gain some steam. That's all I have for this one. This week, this video is for informational purposes only, and the opinions expressed are not financial or investment advice. All opinions are my own and do not reflect the opinions of Valkyrie Investments and its affiliates. No fiduciary obligation or duty exists or is created between you and Valkyrie Investments or its affiliates, including me, by virtue of any opinions expressed in this video.